Okay, we have Victor, or we did have Victor.
Yes. Hi, Linda. Can you hear me?
Yes, I can hear you.
Oh, great.
Awesome. Do we have Alim?
Present.
There he is. Mona. We don't have Mona. And JT is going to try and join us at some point. Okay, well, let's get started, guys. We're going to be talking about DeFi tokens and finance. And we're going to start quickly first with intros. So I'm Linda Montgomery. I'm VP of Marketing and Advisor with BlockStation, which is a digital asset trading and issuing platform for regulated stock exchange marketplaces. And I'm also on the IROC Crypto Asset Working Committee, and I write on digital assets and capital markets. Now I'd like to pass it over to our speakers. Alim, tell us about yourself and what you do.
Sure. Thanks for moderating, Linda, and thanks, Jerry, and BlockHack and Bitcoin Bay for hosting the event. And Victor, it's great to see you. So I guess I'll do a quick introduction. I've been involved in the DeFi space for a couple of years. Myself, Victor, and two others, we co-founded the DeFi Toronto meetup, which started, I believe, in late 2019. So we've been pretty deep in the space for quite some time. When it was very, very nascent, under $1 billion total value locked to where it is today. So it's been really great to see the acceleration in terms of the pace of innovation in the space, and the interest, of course, from now larger regulators and institutions, and Linda, of course, I'm sure you're quite intrigued by the whole DeFi space as well. So it's great to see your presence here. So I also teach at George Brown College in the blockchain program. I'm an advisor to several startups, and I'm also involved with the Kin Foundation as a DeFi advisor. And I recently wrote a chapter in a book that was published just about a couple of months ago, focused on blockchain. But the chapter that I wrote was focused on token economies. So token economies, decentralized finance. These are some of the emerging areas that are very important and of interest to me. And yeah, I think that's all I'll say about myself. I'll pass the mic to Victor.
Thanks, Alim. Thanks, Linda, for moderate this panel, and thanks, Jerry and Leo and the rest of Bitcoin Bay team that host this hackathon, and also have this panel invite me to speak. As Alim said, that we start the DeFi Toronto meetup in the fall 2019, and that was during the lunch break during a conference in downtown Toronto, right? We just say, oh, DeFi, this is such promising use case, and I think partially because we have some finance background, we know how the banking system, investment work. Before I jump in full time into doing the crypto stuff, I was on Bay Street doing investment research for pension fund. And so when I saw DeFi, I just say, oh my God, this is going to really change. It's a game changer. So really delighted to find us three other like-minded people that we started the DeFi Toronto meetup. Now we have almost 800 members now, because the pandemic was, we moved from physical to online, and the benefit of that is that we're able to invite speakers from around the world, not just limited to those in Toronto. That's really, really a huge benefit for us. We can see, increase our coverage on that. I'm also teaching a blockchain course at York University. So last fall, they start their first year of a one-year blockchain development program, similar to the one at the George Brown College, which Alim is one of the instructor. It's really delight to see the people express interest. The program is designed for postgrad students, so they expect you already have a degree. The first cohort I taught Most of them has more of a science, a math background, but some of them are business background as well. So there's definitely a shortage of good developer, blockchain developers. So if anyone want to do a specialized certificate, please check out both program at George Brown and York University. So
Awesome.
that's a little bit about me.
Oh, that's great. I love the DeFi meetup. It's wonderful. So let's start off with what trends that you guys are seeing, given your background and your insight into so many different aspects of the industry. What are the trends that you're excited about, and particularly in the finance sector? Let's start with you, Alim.
Okay, yeah, sure. I can kick it off. I guess like the trends as it relates to DeFi or kind of fintech more broadly. I guess we're talking about DeFi?
Yeah, I think DeFi is a huge part.
Okay.
Absolutely. Yep.
So yeah, I think one of the biggest trends that we've seen in the larger blockchain space and now more focused in DeFi over the last probably 6 months or even 12 months is the emergence of this kind of this realization that we're going to be living in a multi-blockchain world, right? And if we look back about 6 months or 7 months, Ethereum commanded about 98% of total value locked across DeFi. If we fast forward to today, we can see that 30% of total value locked at least is now multi-chain, right? We're talking about other blockchains like Solana and Polkadot and Cosmos and Conflux and others. So, there are a lot of hardcore ETH heads. I'm kind of one of them as well, but I do believe that there is merit in looking at other blockchain ecosystems where we're starting to see an emergence of DeFi activity. And when we look back, we can see the kind of maturation of the space as well, because we saw initially it was focused primarily just on trading, in a non-custodial way across DEXs. We've seen, lending and borrowing become one of the first early anchor use cases of DeFi. And since then, it's really emerged. And of course, stable coins with DAI and MakerDAO. And, since then, it's really emerged into a very robust finance ecosystem that's built on open, public, permissionless blockchains like Ethereum. And I think one of the interesting things, when we think about, it's kind of an aside. I guess it's not really a trend, but for a lot of our listeners and our participants in the hackathon, I think the idea for DeFi is not just to mirror what we have in the existing financial world. The beautiful thing about blockchain and smart contracts and all of the kind of crypto primitives that we've built as a community is that you can create entirely new financial products and services that are not even possible in the existing financial world. So I think that's one of the beautiful things about decentralized finance. And the other thing is that, we're probably going to see, when I contrast developing and developed nations, we're probably going to see developing nations like third world countries leapfrog adoption. And it's the same thing that we've seen in the fintech world, right? When we talk about digital banking, the developing world leapfrogged the adoption of digital banking and mobile banking, not because they necessarily wanted to, but it's almost like they didn't have a choice. Because in developing nations like Africa, in South Asia, many regions around the world, you have a mobile phone, you can access the internet, you can do your mobile banking that way. And a lot of people in developing nations were using airtime credits, as currency. And now they have an alternative. They have a better system that is completely decentralized, where they can be a global participant. It's not region specific, it's cross-jurisdictional, and they can participate in lending, borrowing, trading, decentralized insurance, derivatives, all sorts of interesting things. And so I think it's really a global phenomenon. And I think the developed nations like Canada and the US will be a little bit slower to adopt, DeFi, just because, we're a little bit heavier on regulation. We already have a robust financial infrastructure with banking and payments. But DeFi is a better, more efficient, a faster, censorship-resistant way to do finance. So I think it is going to come. And one of the trends that I talked about in the DeFi meetup just a few weeks ago with Victor, was that we're starting to see the emergence of players who are bridging centralized finance and decentralized finance. A startup that I worked at before called Alchemy.network, they're doing just this. They just re-emerged out of stealth again, I think just last week. So, hats off to them for doing a great job. But their goal is, again, to bridge centralized finance into DeFi in a very regulated and compliant way. So I think we're going to see, we're going to see a tsunami of capital coming into DeFi, not just from DeFi nerds like all of us in crypto, kind of early crypto adopters, but also from institutions as well. I'll stop there. There's a lot of other trends, but I'll hand it off to Victor.
Yeah, hear from you, Victor.
Oh, thanks, Alim. Thanks, Linda. Because I used to cover investment research, so I tend to think of look at this space through the lens of asset class. So if you look at you rank the world's biggest asset class by market cap, the number 1 is derivative. The number 2 is real estate, which including residential real estate, commercial real estate, which I used to cover when I was on Bay Street, and then of agricultural real estate, which Canada happened to have a lot of agricultural real estate. In fact, we would probably see agricultural real estate increase in Canada because of the global warming that many cold areas become farmable. So the two trends observed in the DeFi space is actually related to these two, the largest asset class in the world. So first one is derivative. You probably heard the news that Binance has created derivative to trade Tesla stock, even though they don't own Tesla stock. And it's not tokenized. They don't have the Tesla stock in a vault somewhere. It's a derivative product. So it has to attract some regulatory question from UK. Put aside the regulatory risk, you can see that derivative is gaining more traction. I think the big benefit of derivative is that it allows people to expose to some financial asset without actually have to own the financial asset. Because as Alim said, that the traditional finance are very constrained by national boundary, right? People in China, people in Russia or other countries, they can't buy Tesla stock because it was listed in NASDAQ, and many country residents don't have the ability to buy. So if you like the company, you have belief in the company, they should have some way allow them to express that preference in their investment portfolio. And derivative, it is one way to do it for under those conditions. Of course, as Canadian, we are very fortunate that we can buy US stock as easy as buy Canadian stock. But remember, there's many people in the world, they cannot buy Tesla stock, even though they want to support that transition to renewable energy. So that's number one. We should pay attention to the derivative market. To support the derivative on a blockchain, one of the major challenges is a data oracle. So check out Chainlink's white paper 2.0. They have some newer vision, which is quite interesting. They will talk a little bit last 2 days during the Real Summit, the Ethereum Summit conference. So it's quite interesting. The second one is related to real estate. As you know, MakerDAO has now added a real estate, tokenized real estate as one of the collateral. So real estate is the second largest asset class in the world. According to Visual Capitalist, the market cap is $280 trillion, all the real estate. To bring that to the DeFi space, that's a tremendous. One of the benefits is that it definitely less correlate. The price of real estate definitely less correlated with Ether, Bitcoin's price. So it make the lending, the collateral more stable. So you're less likely to get liquidated. So it's really very important. Past the size, the size is so big, you can easily grow the DeFi space because there's more value can represent in the DeFi space. So that's, I would say, that's the two trend that I like to highlight here.
Derivatives and real estate, awesome. So if we look at the last year or so, I mean, this has sort of been gradually happening. More and more large institutions, financial institutions, brand names like Visa, for instance, are I guess, really sort of doubling down their efforts in the area of distributed finance. Can you comment on that? Like, what's the impact of this, Alim?
Sure, I can kick it off. I think it's institutions and more traditional TradFi, we'll say for short, traditional finance, starting to realize that they're just using underlying new financial infrastructure built on blockchains. It just inherently has way more efficiencies, right? So when Visa and MasterCard are thinking about now, instead of using their own payment rails for money remittance and for credit transactions and what have you, and now they're using stablecoin rails, and they're thinking about all that. I believe MasterCard or Visa just announced, I think, a partnership with, or I think it was PayPal, with Paxos to start to create their own kind of potentially a stablecoin and kind of stablecoin infrastructure for payments. It's just finance 2.0, 3.0, right? Like, we're advancing, and legacy financial companies are going to realize that there's a better, faster way to do things. PayPal just announced unlocking crypto purchases and buys for their 70 million Venmo customers, I think just a couple of weeks ago. And Wealthsimple here in Canada has allowed crypto trading for quite some time. So we're starting to see a lot of fintech ventures move into the space much more quickly than maybe traditional financial institutions like banks. But I predict that probably in the next 12 to 18 months, we'll start to see traditional financial institutions like banks in Canada move into crypto. And in the US, it's already happened. Goldman Sachs, BNY Mellon, announced that they're going to be unlocking that for their customers. I believe BlackRock as well, maybe Linda, you have some more insight into that, has already started to look at funds for their clients in terms of crypto.
Right, so, ETFs. At some point, they'll have ETFs in the US.
Yeah, that's a great point. Yes, and we already have the ETFs for Ethereum and Bitcoin here in Canada. So it's, I think, I guess to boil it down again, it just comes down to better, faster, cheaper, more efficient financial infrastructure that's built on blockchain. So I think naturally everyone will come into the blockchain fold. It's just a matter of time.
Mm-hmm, right. And then Victor, I'll be interested in your insights on this, large institutions and traditional institutions, TradFi, as you call them, Alim, moving into the space. And also, I'm interested in your feedback of what you're seeing there, and also within organizations like, pension funds. I mean, you're on a committee, a research committee, I believe, within an organization doing that. I know this has been commonplace for a few years now. So, what are we going to be seeing in these organizations that are kind of doing the studying but haven't jumped in yet?
Yeah, thank you. I have a mixed feeling about adoption of institutional investor in this space. I used to work for institutional investor. The good news is that the beneficiary of pension fund will have more exposure, more diversified asset mix, which is good. As we know that in the traditional finance, at the asset price, you look at whether bond or stock is really inflate a lot because the central bank printing money. So where crypto is still at the emerging stage, there's a lot of room to grow. So it definitely provided diversification. As an investor, I'm happy because the adoption of institutional investor, it increased the price of the crypto and also dampened the volatility. So you're less likely to see hyperbolic rise as we saw in 2017. So that's good things. What I'm not crazy about is what has been lost because this institutional investor. Now you can expose to Bitcoin, but without the benefit, a feature of what original Bitcoin designed for, which is censorship resistant privacies, right? If you invest through Bitcoin through ETF, they can censor you because it's centralized. You have centralized entity control. You don't have privacy. Centralized exchange, especially in Bitcoin, because you cannot trade Bitcoin on decentralized exchange unless you tokenize it. That means that the government can monitor your transaction through centralized exchange.
Yeah.
So there's a pros and cons. Yes.
Yeah. So I was just going to say, the other thing we're not talking about here. I mean, we could, but regulation, which kind of goes hand in hand with the institutional adoption, doesn't it?
It does. It does. Canada, unfortunately, a little bit slow in terms of regulatory adoption. But as Alim said, that probably maybe later this year, we'll hopefully see that bank will allow to hold crypto asset for their customers.
Right. Okay. Why don't we jump to protocols, layer 1, and ETH's dominance. I think you referred to it. You were talking about multi-chains, Alim. Can you give us your feedback in terms of protocols and layer 1 infrastructure companies? Like, are we going to see, is Ethereum going to continue to be number 1 in the future? What do you think?
Yeah, sure. And maybe this is where Victor and I might have a different opinion. I know that between the 4 of us in the DeFi Toronto group, we debate this all the time. We have weekly calls to discuss new developments, and it's just an interesting view. Yeah, I truly believe that we are going to live in a multi-blockchain world. Again, I'm a big fan of Ethereum. I always will be. But I do think that, we're starting to see, if I look at, Solana, for example, that blockchain ecosystem, they recently launched Serum DEX. They also have a Radium protocol, which is a kind of a yield aggregator, and where you can do liquidity mining and yield farming. And there's a bunch of other new developments in that space too. Polkadot's is still got, I think, a head start on many of the other blockchain ecosystems based on the maturation of its DeFi ecosystem. But I do think that there's something to be said about the crypto economics of these different blockchain cryptocurrencies, not tokens, because again, I would say these are level 1 blockchains with their own crypto, so I'm going to call them cryptocurrencies. I think, and I have to give credit here to Victor, because Victor educated me on this just last week, and he said that if we look at Ethereum, as we enter the next era of Ethereum, we're starting to look at Ethereum as a deflationary asset in terms of supply. And the reason being is because if we look at EIP 1559, which many of you have probably learned about, and if you haven't, I would recommend take a look. which is coming, I believe, in the next month or so. I believe it's sometime in July. It is basically going to start, to burn. We're going to start burning of Ethereum, right? ETH. We're going to start seeing the burning of Ether. And then if we look at DeFi, more and more money is being locked up in DeFi in terms of Ethereum being locked up. So for that reason, it's almost as if Ethereum has become a deflationary asset because there's less and less supply being made available. And if I look at the crux of why, okay, so we know that EIP 1559 is coming. That's going to cause, the burning of your Ether. But if I look at the other side where we look at the total value locked, why is more and more money being locked into DeFi protocols on Ethereum? Well, Victor touched on this already. He said, with the rampant money printing that's going on and basically the debasement of fiat currencies, everyone is looking for yield and also trying to move their assets to safe haven assets. Currency may not be looked at as a safe haven asset. The US dollar may not have the dominance it once did because of the crazy amount of debasement that's happening. Mm-hmm. So people are in Linda, back to your earlier question around institutional adoption and pension funds. As an aside, I'm just going to take a quick tangent here. Pension funds around the world are ultra conservative organizations. Victor worked for CPPIB. Last year, I worked for the Ontario Teachers Pension Plan on the innovation team. These are ultra conservative organizations. So they're going to be the last ones to enter crypto, but when they do, it's going to be in a very, very big way. Many pension funds around the world have already done that. But I think the point that I want to make is that, again, with the debasement of the currency and the lack of investable opportunities globally, even pension funds are starting to look more deeply into venture capital, right? The Ontario Teachers Pension Plan has the Teachers Innovation Platform, which is their venture arm. And they're looking to take a little bit more risk. Fixed income is kind of dead, right? Victor, you might have more insight and expertise in this area, but fixed income is kind of dead. Where are we going to generate returns and yield? So it's going to be venture. And I think venture capital is going to become more democratized. And the next natural thing is crypto. I think, the yields that we're seeing are just insane. Not sure if that's going to continue in the short term. I think we're in a bull cycle right now, but for those reasons, I think we're going to see more money piling in. And I'm going to take this back to my original point, which is the total value locked on Ethereum. So I think for that reason, as more money comes in to crypto and ultimately into DeFi, we're going to see TVL skyrocket. And I do think that Ethereum is going to continue to almost act as a deflationary currency for that reason, right? Because more of it is going to be locked up. I think when it comes to, Linda, your original question around where do we see, the different multi-chain universes kind of competing, I think Ethereum will always have a lead, at least for the foreseeable future, because it was kind of first mover advantage. If in the blockchain world, it's all about community and it's all about the developer community. Nothing else really matters, at least in the beginning, right? It's about how many developers do you have, how many people are developing, how many people are supporting the ecosystem and using it. And Ethereum by far is still the largest, biggest giant in the space, for that. So,
okay, let's ask Victor that question. What do you see as the future for Ethereum as the most dominant protocol?
I'm pretty bullish on Ethereum, but I'm not a maximalist in the sense that I say we should welcome competitions. But all the sign I saw in the space, I feel that Ethereum is definitely ahead of and other. As Alim said, that if you look at the strength of the developer community, Ethereum just next to none. The second one, Bitcoin, was so ahead of Bitcoin as well. There's two things maybe easy to explain, express how do I view the Ethereum space. So I do believe that, like Alim said, we will have a multi-chain world. But what I see is like we have a power law distribution. Is that the few big one will take maybe 80% or 90% of market cap. You can compare that to language. You can see the world language usage. We have many language, but we have a few dominant language, especially in business world. That for English is the dominant language for commerce. For if you look at the e-commerce website, it is the English is. I will say that you can think about the network. The design of the network is an expression of value of whoever believes that the value. And I feel that Ethereum has a value, a much more simple, basic value that Ethereum just provide security and consensus. But allowed other developer to build application to express some unique value they believe in. So you can think about all the app is a form of expression of a community value. There's two things make Ethereum's network effect stronger. Number one is that if compared to Bitcoin provides digital scarcity to one token. That's the Bitcoin for itself. Where Ethereum is an infrastructure, it provided digital scarcity not only to his own token Ether, but for any other application who want to have that kind of a feature. So you can view it as Ether blockchain as a form of provide digital scarcity as a service.
Right. I'm just going to ask Jerry. We're a little over. So we want to leave some time for Q&A, and I also wanted to ask you guys about your crystal ball, what you think is going to happen in the next 10 years or so. So
we have time. We have a bit of time to go.
Okay.
Okay. So can I continue?
Sure.
Okay. So the second thing make the network effect of Ethereum very strong. Besides that, it provides digital scarcity to other application, is the composability that you can build application by combine different application already exists. So you don't have to do everything from scratch. So that's a really, really strong network effect. So Vitalik, a few years ago at the Toronto conference, but people asked, what's the killer app on Ethereum? And Vitalik say that there's on Ethereum, the killer app is not any single application, but the interlinking among the app. That's the most powerful competitive advantage. So
awesome.
That's why I'm pretty bullish on Ethereum, but I'm open to competition from other other blockchain.
All right. Why don't I ask anyone if they have any questions they'd like to ask you guys?
Yeah, I have a question.
Okay, sorry. Go ahead.
Yeah, hi. My name's in Canada. I'm not actually in Canada. I know you guys are, but my last name's Canada. So my project, I didn't hack on it in this hackathon, but it's called Black Magic Bank. And the kind of elevator pitch is a mobile first credit union that packages and abstracts DeFi for the everyday consumer. And one big thing I'm running into, I'm in talks with the National Credit Union Administration in the US for chartering. And one big thing I'm running into is kind of like the regulatory and legal compliance part of it, because I think for the consumer, the most important thing is insurance, right? Is that they want to make sure that if there's a bank rush, if I lose my money, that I'm not, left out and my savings aren't gone. So, I think that's been kind of what I'm trying to tackle. And I'm curious if you guys have any thoughts on that, any suggestions for me, because I think that's the 5 to 10 year vision. And I hope like Black Magic Bank can be a part of that, at least in the US and maybe global.
Okay, you want to take that, Victor?
Yeah, I think if you hold customer fund then you probably need to get a bank license, which you'll be insured by the FDIC. Is it in Canada? Maybe there's a one insurance deposit for cover all the
FDIC.
bank. Yeah, you probably need that. Or you can, or alternatively is that you provide banking service without hold customers' fund. That's maybe a different approach. That probably can reduce some of the regulatory burden on you. The reason why we have so much regulatory on the finance is that we want to protect the consumers. We don't want the person to take the money and run away. That's where in blockchain you could provide service without actually hold the customer's funds. So that's one of the very interesting thing about this technology.
Yeah.
Alim, I'm sorry.
Yeah, the only thing I have to say is, yeah, check out like decentralized insurance protocols like Nexus Mutual. And if there's ways to incorporate that as Victor said, as a primitive, that's an interlinking between the different applications you're building, then that could be useful. So
Yeah.
check.
And also, I'm sure in the US they have this, we have like a regulatory sandbox. So, you may not have everything sort of, complete and compliant the way you'd like it, but our regulatory organizations enable you to be able to, operate sort of with their participation. And so that, until you are able to do that, and until there is, clear regulation and that's guidance for everybody.
Mm-hmm.
So.
Awesome, thank you. And to the Nexus point, Alim, the issue with the Nexus is still early, but they have like 2.6% charge for their, and that basically kills any consumer, stablecoin yield. So that's the biggest issue. And that's why I'm going credit union, is because the credit union has the kind of insurance with the chartering, and as well they can provide that for the consumer, and also I can still get maybe 2%, 1% for the consumer, which is still like astronomical compared to any traditional finance.
Yeah, no, that's good. Yeah.
And we just had Bridge Mutual as one of their speakers earlier, which is another alternative to Nexus. You can look at. Any other questions? Alwyn, did you have a question? We can't hear you.
Yeah. Can you hear me now?
Yes.
Yes.
Okay, so other than a big thank you, Linda, and a super thank you to you guys, Victor and Alim, because of all the value you guys bring to this space, which just can't be talked about enough. My question to both of you is this: from the time of CryptoKitties, when Ethereum shook, and then it moved over to another blockchain, and then we have Alim mentioning that about 30% of DeFi has now moved over to other blockchains from Ethereum. And then we even had Polymath mentioning something, but then Polymesh is going to be another blockchain. So you have their tokens. The question I have, because I use Melon, thanks Mona, and I got into creating a mutual fund, and then eventually, when I was using the whole app, the kind of gas price, $800 per transaction, it just kind of shooed me away, right? So has that really changed? I mean, okay, Ethereum's getting 159, it's getting deflationary, but because I haven't used that blockchain, I do understand transferring ethers cheap, but when you're talking about contracts, which is what it's all about, has that changed? Is scalability still suffering? And if it does continue to suffer, we do understand that ETH 2.0 is slated to solve that when it comes, but is that something you guys can talk about and tell that is that a problem now, or is that over? I mean, just to put it in context for people, is there any comments you have?
Sure, I can chime in. Victor, why don't you go first, and I'll go after you this time.
Okay, thanks, Alim. Yeah, I do see. Let's put it this way. Think about the block as a real estate. again, I'm all happy because I cover real estate. Everything is, I see the world through the lens of real estate. You can think of the block size on the blockchain is a real estate. So they charge a rent. It happened to that the rent on Ether is very expensive, partially because it has a limited supply. So the team are trying to work on to solve the issue on the layer one. But no matter how you solve, because the nature, the decentralization and the security, it will be always relatively expensive. So layer two is there's a multiple layer two solutions coming on board, which I'm pretty optimistic, especially for a small amount transaction. You really don't need the security guarantee of the layer one. So when I look at other chains, like for example, Binance Smart Chain, they are very fast because they have a very limited validator nodes. And also because they can process so fast, now the size of Binance Smart Chain, the size, the storage is 1/4 of Ethereum's full size, the chain size. So eventually you will become very, very expensive to run Binance Smart Chain because the cost of storage is become so high. So it means that they will become even more centralized. So there's a little bit trade-off between the speed of transaction, the throughput, and the decentralization. So I presume that people have a high value will still want to stay in the Ether level one, layer one, to guarantee to have that security guarantee. But for smaller transaction, I agree that we need a better solution.
Okay.
And I'll just add that, yeah, I think everything Victor said was totally true and makes sense. And I think any second layer scaling solution that assumes the security guarantees of Ethereum, will probably gain a lot of adoption. Like we're seeing Polygon, Matic, ZK rollups, Starkware, all of these solutions are getting a lot of adoption. And even if we look at DEXs like Uniswap built on Ethereum, they're moving to V3 later I believe this month. And that'll have some additional, solutions around gas efficiencies. And there are also token standards on Ethereum that you can use to gain certain efficiencies, like ERC 1155, I believe, which Engine uses, which allows you to mint both fungible and non-fungible tokens. There are certain, attributes related to some of the functionality available within that smart contract that operate a little bit more efficiency than a traditional ERC 20. So I think there's a lot of other ways that we'll be able to kind of mitigate the high gas fees, as well as the scaling hindrances that we're seeing right now.